Hi there, traders. This is Brad Gilbert with FX Market Insight for Thursday, the 28th of January. All right, now it's all systems go. Didn't take long for everything to jump into action here. Now, massive risk-off day in that North American session. Now, you can see here, all equities, basically, treasuries are getting hit, everything. Basically, the Fed meeting that came out, they're very concerned about the recovery of the US economy or the way things are going and everything else. So equities have been slammed. If you have a look at the major currency pairs, the dollar's up against everything, right? This is like the first day in a long time that we've seen this come into play. And if you look at the US futures on the equity markets there, they're also in the negative, which tells you they're going further, right? So the moves should continue. If I just give you a look at the charts, I mean, this is a straight up and down slam dunk risk off day. And what that means is the US dollar rallies, right? It should rally against everything. And it has. It's absolutely blasted the markets. This is the sort of move that the market's been waiting for, I reckon, or definitely since the start of the year. Sterling still hasn't broken down through 136.40. Now, there was talk of the ECB talking about potentially lower rates. And there's a bit of euphoria in the UK around the rollout of the COVID vaccine. So sterling yet to really hit the slammers. But I tell you what, if the US equities continue to move lower, this is just the start of the move, and we could see a more sustained run from here. Now, is that likely? Well, going off past price action, this may only be a short-term fix, as in a short-term move. But if you have a look at the major currency pairs, they are all lining up correctly, okay, exactly as they should with this sort of profile of the markets. Look at the major pairs here. The dollar block going down, the dollar pairs going up. You love to see that, especially with the US equity futures still moving to the downside, which tells you tomorrow there's going to be more losses on those US equities, okay? Now, I can't tell you, I haven't got a crystal ball to tell you how long that lasts for, but you need to track the market when you're looking at it. If you are trading and you've got some things in play, well, let the market guide you through those. Stick to your trade plan. All right, so just having a look at the overall picture across the board, I can't see anything that's going to change this just immediately. I mean, look at the price action here of the dollar index. It's not exactly clean. It's shot up, come back down. Now it's coming back again. So we have to sort of wait and see how this really plays out. But from everything that I'm looking at, suggests that the dollar move is going to be a little bit more than just a one-day event. And that's because the main trigger, the Fed, right, they've come out and expressed in their first meeting for the year exactly their concerns, and that's been acted on, right? And that's what we've been waiting for. I said this yesterday, wait for the Fed. They may come out and tell us what's going on. They may not. But, you know, what they've done is given the market enough, and you see the reaction across the board here. It is rather impressive. So this is a good thing, right? So hopefully if you were in front of the screens, you saw exactly how this was playing out and you got involved, because there was a number of opportunities here on the charts to get in. Some of the moves weren't exactly like sweet, but I tell you what, the trend lines, everything's in play, and we've got some clear direction for the moment. That's where I think everything's going to trade from here. So, and the other thing is as well, with the Fed coming out and issuing their sort of concerns, keep an eye on the data as we go forward over the next 24 hours. As I said, the ECB, we're talking about potential rate cuts. The economic sentiment numbers, or these sentiment numbers here, industrial economic services for the Eurozone, keep an eye on those. Really weak numbers there, may confirm an ECB rate cut or continuing that dovish talk, and that should keep the euro going lower. And that's it, guys. It's pretty exciting. All right, guys, have a good one. Cheerio.